Okay, I'm recording, so just give it a beat and then.
This is Robert Harper with Virginia Farm Bureau's Grain Division, bringing you the Merchandiser Minute for Friday, May the 3rd, 2019. And congratulations to you all this week. I know you've been spraying, spreading, and planting at record pace. We hope you've had a safe and productive week. We're going to start off talking about next week first. We've got a big week next week. We saw this week our trade team tell the Chinese, while we were in Beijing, we are in Beijing, China this week, that if we didn't have a trade deal done by the end of next week, that the United States would walk away. China is going to be in Washington next week to have trade talks, and we're really anticipating maybe something coming out of next week and seeing some information about a deal. We'll also have Japan in Washington next week for bilateral trade talks with the United States. North American weather concerns did creep into the market this week and put some premium back into your corn price. Corn futures were up about 7 cents this week on the nearby contract. As we saw from the USDA on Monday, the planting progress pace at a very slow level this year. At the same time this week, we saw soybean futures continue their slide down as the managed money speculator who is still short continues to add to that short position. We do get a USDA crop production report next week on Friday. Keep your eye on that. And we know that politics are just having such a big impact on our prices. Record short corn positions this week in Chicago for corn and soybeans. We saw amazing strength in the dollar futures. And then remember, this is coming mostly from a lot of lack of strength in the euro. And again, that's tied to the Brexit deal. We've talked about that some, but keep your eye on the dollar. We saw massive volume trading this week in futures as the futures contracts rolled from the May to the July. And corn planting, again, we were told was 15% complete as of Monday, and the average is 27%. And remember, it rained most of this week for the majority of the Corn Belt, and the forecast for next week looks to be the same. We did get some misinformation this week from the USDA, from the White House, I should say, not the USDA, that there may be a consideration of a market facilitation program in 2019. But we heard from Secretary Perdue as late as yesterday that that information and that subject has not been talked about. The CME has declared force majeure on the Mississippi and Illinois rivers. In St. Louis, the Mississippi River is expected to crest on Tuesday, and they've stopped deliveries and unloadings of vessels there for all the folks who are delivering on futures contracts. The Kansas Wheat Tour went on this week, and the yield expected is 47 bushels to the acre. That's a higher yield than last year by 9 bushels. Again, the Kansas Wheat Tour came in with a yield expectation of 47 bushels, 9 bushels better than last year. And also we saw this week the Canadian government say that they were going to put in some price supports for canola farmers that have been hurt by a recent trade dispute, also with China in regards to canola, and that they were also going to offer some interest-free loans. The Federal Open Market Committee told us this week and confirmed what they've already said: there'd be no interest rate hike. And we saw an interesting number today about the strength in the overall economy from the Labor Department. We're at a 50-year low in the unemployment rate, 3.6%. So again, keep your eye on the board next week. It's going to be a very important week from a price perspective. If we do get a deal done with China, give us a call if we can help you with any local basis. This is Robert with Farm Bureau's Grain Division.